Okay, today's topic is everyone's favorite topic, taxes. Okay, you pay federal taxes, state and local or Fairfax County. This is some of the things you could pay. General sales tax in Virginia, you pay 5.5 cents on every dollar of things you buy, which goes in part to the state of Virginia and part to Fairfax County. Businesses pay tax to the state. You pay taxes for buying cars or boats. We pay a motor vehicle tax, so-called a personal property tax, which actually goes to the county of Fairfax. You pay property tax to, in this case, not to the state of Virginia, but to Fairfax County. And then you do pay to the state of Virginia alcohol and tax. A large portion obviously comes from tax on people's income, and then other taxes and fees that you have to do for registering for different things. Okay, the federal government, where do you spend the money? National defense. Interest actually is should be a little bit bigger here. We have a $17 trillion national debt. The debt is a compilation of deficits, which is the overspending of the federal government on an annual basis, plus the debt to pay for that, so we have to borrow money. So our annual budget is not quite $4 trillion a year, and the deficit is about $1 trillion, so we're spending a quarter over what we should be spending, 25%, and so that's what this is from. Social Security, Medicare, huge chunk, especially because as our population ages. This is going to be FBI, the Homeland Security, this is going to be Department of Justice, etc. Social programs like welfare, but any program, Department of Education, for example, money to help kids go to college, and then we have everything else, and there's a ton of other things that would fall into one of these two categories. Okay, so what kind of taxes do you have? Sales taxes on when you buy things like food, clothing, etc. Income taxes, your tax on income. The state and national government have it. The county of Fairfax has always had majority of its income coming from tax on your house. The reason it's that way is because when it started, actually we were an agrarian society, meaning that the majority of our income came from being farmers. Today, obviously, that's not true. So there are some people that believe we should change from property tax to a local income tax. And then you don't have to pay, at least for the national government, you don't have to pay tax on everything you make because you have deductions, such as on my house, I don't have to pay tax on interest. So the interest payment is deducted from my gross earning, my total earning, and then I pay an adjusted gross earning tax on that. And this obviously is fairly self-explanatory. Houses buy products from businesses. They have to pay tax to the government. The business pays tax to the government. The government, whatever level, in this case the national government, is going to provide services such as national parks, protection, military, etc. It's also going to pay services to businesses, or provide services for business, such as the U.S. Department of State is going to help businesses abroad. Okay, 3 types of taxes: regressive, progressive, and proportional. Regressive means that as you go backwards, as you go down the income ladder, you pay a higher percentage of your total salary. So that gas tax is regressive. Bill Gates and I pay the same amount of tax on our gas. It's a much larger proportion of my income, though, than it is for Bill Gates. Progressive is you progress up in the percentage you pay on taxes as you earn more. So this person who's making $10,000, in this example, would pay 10%, but the person paying earning $100,000, pays a much higher, 3 times the amount. Proportional would be everybody would pay the same proportion of their income, but the total amount paid would be more. And in that case, you would get rid of deductions, and that's what makes it controversial, because charities, for example, when you pay to a charity, that is a deduction from your total salary. So, and speaking of that, you start with your income, you subtract your deductions, and you end up with your adjusted gross income, which is your taxable income. And let's look at some things that you would pay taxes on. For example, your salary. You use a W-2 form that the business gives to the national and state government, so they know how much you make. Interest on a bank account is taxable. You put on a 1099 form. Money you make when you sell anything. You sell your house, that would be a gain. When you sell a stock where you make more money than you paid for it. And dividends on investment means every once in a while a business will give you a little return, not when you sell it, but just for having stocks in that company, so that, again, you pay tax on. Okay, so tax deductions, medical expenses that are out of pocket, taxes to other governments. You may own stocks abroad, and so that would be a tax to a foreign government for having it. Losses of great disasters, charity. I didn't say this one. When you have a home loan, and most people do, the interest you're paying on that home loan is deductible. So again, to go back here, you would start with your total gross salary and you'd subtract all those things and you'd end up with your then taxable level. So if you're making 100 grand and all those things take 10 grand out, then you're really being taxed at a 90,000 level. Okay. Tax credits are just that. You get a credit for doing something. My brother adopted 3 kids, and he got a tax credit for each one of those kids. He couldn't use it all up in 1 year. I get a tax credit every year for my own children. So again, those things are taken out of the money that I would pay in taxes. Okay, so if we're categorizing, these are the deductions that I just mentioned before. Contributions to Red Cross would be any charity. If you're doing an improvement on your home, which is going to reduce costs, we mentioned mortgage, child care. This is actually, you have to tell them how much child care is going to cost the next year, if you know how much medicine it's going to be, and then you can deduct yourself. You can have, again, I have 3 deductions for them. Okay, so we've already gone over sales tax and income tax, so if you want to read what they are, I would just stop this. Likewise, if you want to get property tax or why you would take a deduction, you can do that. And last but not least, lobbyists are paid a lot of money to add deductions because businesses want them. For example, wealthy individuals want them, nonprofits want them, so they are important to the process of creating the tax code. And that's it.